So, you know all about moving averages, right? You see them on your charts, you get the basic idea. But let's be honest, are they actually making you money? If you feel like you're stuck in that gap between knowing the theory and actually turning a profit, don't worry. Today we're going to fix that by building 3 complete, actionable trading systems from the ground up.
Does this feel familiar? It's a super common problem. You understand the tool, but you don't have a complete strategy wrapped around it. And look, it's not that moving averages are broken, it's that just having a tool isn't enough. You need a system with rules. Today, we're going to build those rules. All right, so here's our game plan. First, and this is the most important part, we're going to cover the one single rule that you absolutely must follow before you even think about using a moving average. Then we'll dive into 3 totally different systems, each designed for a different type of trader. By the end of this, you'll have a clear idea of which one is the right fit for you. Okay, before we get into any of the cool strategies, we have to talk about the foundation. This is non-negotiable. This is the step that comes before all the other steps. You have to identify the current market regime. And really, it all boils down to this one simple question. Is the market trending, making higher highs and higher lows, or is it just chopping around sideways in a range? If you get this right, you are already halfway to a good trade. If you get it wrong, you're basically setting yourself up to fail right from the get-go. I mean, just look at this. It's night and day, right? In a trending market, moving averages are like your best friend. They're your guide, showing you where to get in and helping you stay in the trend. But in a choppy, ranging market, oh man, they are a total trap. They'll just spit out false signal after false signal and slowly bleed your account dry. So remember, trend is a go, chop is a stop. All right, now that we've got that golden rule down, let's build our first system. This one is called the trend pullback strategy. This is the playbook for the active trader who wants to hop on a strong trend but wants to do it intelligently. The whole idea here is pretty simple. We want to ride that big wave, that strong trend, but we don't want to chase it. Chasing a breakout is how you buy the absolute top. Instead, we're going to be patient. We're going to let the price come back to us, giving us a much smarter, lower risk entry point. So here's our toolkit, and it's elegant. We're using 2 exponential moving averages, or EMAs, which just means they react a little faster to recent price action. The 50 EMA, that's our big picture trend filter. Think of it as our compass. If price is above it and it's sloping up, we're in an uptrend. Then you have the 20 EMA. That's our action zone. It's the dynamic area where we start hunting for our entry on a pullback. Okay, let's walk through the exact steps. Step 1, confirm the trend is on our side. Price has to be above that rising 50 EMA. Step 2, and this one requires discipline. You have to wait for the price to pull back to our 20 EMA action zone. No chasing. Step 3, and this is absolutely critical, we need a trigger. We don't just blindly buy because price touched a line on a chart. We need to see buyers stepping in with force, something like a big bullish engulfing candle. Finally, step 4, manage your risk. Your stop loss goes just underneath that recent little dip, the swing low, and then you can trail your stop up to lock in profit. This right here is the #1 mistake traders make with this stuff. They treat the moving average like a magic button. The fix is a simple but powerful mental shift. The moving average gives you the context. It tells you where to look for a trade. But the price action, the candlesticks, that's your trigger. It tells you when to actually pull the trigger. Context and confirmation, you need both. All right, let's move on to system number 2. This one is for the systematic trader, the person who loves clear, defined rules. We're going to take the classic crossover strategy and give it a serious upgrade to survive in modern markets. So why does it even need an upgrade? Because the standard crossover system has a fatal flaw. It gets absolutely demolished in sideways markets. It just whipsaws you back and forth, buy, sell, racking up a ton of small, frustrating losses. Our system is designed specifically to avoid that trap. So here's what we're working with: a fast 10 EMA and a slower 30 EMA. That's our crossover signal. But the real magic, the secret sauce that makes this whole thing work, is what we call a chop filter. This is our shield, our defense against those nasty sideways markets. And the cool thing is, you've got 2 great options for this filter. Option A is for the indicator fans. You can use the ADX. Basically, if the ADX is above 20, it says there's a trend. So we only trade crossovers when ADX gives us the green light. Option B is for the price action purists. We just look at the chart. Is the 30 EMA sloping nicely up or down? And has the price clearly broken out of a recent little box? If yes to both, we're good to go. The rules here are super mechanical. For your entry, you wait for the crossover to happen, and then you enter on the close of that candle. Don't jump the gun. For your stop loss, you can tuck it under the most recent swing low, or you can use a volatility-based stop like the ATR. And for your exit, you can either get out when the averages cross back the other way, or you can just trill your stop using that 30 EMA as your guide.
Again, the big mistake is so simple. Trading every single crossover you see, that is a recipe for disaster. The fix is a mindset shift. Think of it this way. The crossover gives you permission to look for a trade. But it's the chop filter, the ADX reading, or the price action breakout that gives you the final confirmation to actually click the button. Permission versus confirmation, that's the key. Okay, last but not least, system number 3. This one's for the long-term investors and position traders out there. We're zooming way out, ignoring all the daily noise and just focusing on the big, powerful, overarching trend. The goal here is not complicated at all. We are not trying to predict tops and bottoms. That is a loser's game. Our one and only job is to be invested when the market is in a major bull market and to be safely on the sidelines or at least have less risk on during a major bear market. That's it. We're just trying to be on the right side of the big wave. And for this, we use the classics. On a daily chart, it's the legendary 200-day simple moving average, the SMA. It's probably the most watched indicator in the entire world. And if you want an even higher level, longer-term view, you can use the 10-month SMA on a monthly chart. The rules here could not be simpler. It's basically a binary on-off switch. Is the price above the line? Cool, we're in risk-on mode. Is the price below the line? Okay, we're in risk-off mode. Now, this is really important. For that monthly system, you only make your decision based on the closing price at the end of the month. Ignore all the noise and drama in between. Now, here's where people get this wrong. They expect this system to perfectly sell the exact top and buy the exact bottom. It will never do that, and that's not its job. You have to judge it for what it is. It's a regime filter. Its only purpose is to tell you whether the general market environment is bullish or bearish, and to keep you on the right side of that massive long-term trend. And for that purpose, it works beautifully. All right, so let's do a super quick recap of the 3 systems. We've got the pullback strategy, that's for the active trader who wants to ride the trends. We have the crossover strategy, but remember, the key is using it with a chop filter. And finally, we have the long-term filter for navigating those big multi-year market cycles. So that brings us to the final and most important question, really. Which one of these traders are you? Are you the agile, active trend rider, the disciplined, systematic rule follower, or the patient long-term navigator? Because knowing the tools is one thing, but knowing yourself, that's the real first step to mastering the markets.